Hello everyone, welcome to Elliott Wave YouTube channel. This is Henry. Today is Wednesday, June 15. The time is around 1:03 a.m. GMT. And today we are looking at the chart of the S&P 30 minutes chart, which is kind of similar to the 1 hour. Um, we can see there's a double X. Now a lot of people may be not familiar with that is. It's not a typo here. This is a triple three, which is basically WXY and then X again, which is some people, if you want to make it a little bit clear, WXY and then double X is the second X and then Z. So this is a called triple three, or if all the W, Y, and the Z is a zigzag, then it's called triple zigzag. But it doesn't always have to be triple zigzag, because the corrective structure within W, Y, and Z can be any three waves corrective structure, right? Now, this is also called 11 swing structure. Okay, all right. So we broke below this previous low, May 2022 low. So then we are extending lower again, what we call a triple three, and I'm going to show you what the some of the other alternates are. But for now, with this primary view, what we are looking for now is the rally to fill below 41.76 for the downside. Now notice here that this decline, now that just in terms of the short-term alternate, this 5 ways down, 1, 2, 3, 4, 5, in the minor degree is later going to be ending with A, right? Now that could be, for example, the alternate could be that with A already finished here. Now that's not really that big of a deal. That means we're gonna be doing a bigger rally. There is an FOMC meeting, right, this week. So yeah, it could be that there is a bigger rally already instead of doing this, because a lot of people, sometimes they don't understand Elliott Wave that well, and they put a literal interpretation of every single little swing as some kind of like a guarantee this is going to happen and marginal low going to happen and so on. But actually the whole idea of this is that as long as the rally stays below 41.76, we could see another leg down. It may be just with the marginal low, or it may be that 5 already finished here and we do the bigger rally already in the B before going down again. But this is the key at 41.76. So now zooming out, let's take a look here at the daily time frame. I'm gonna copy this double X on the daily. This is your double X. Now if this is your double X, where's the Y? The Y has to be somewhere here. Okay, now this rally looks impulsive, so perhaps there is an expanded flat ABC here, so I'm gonna move the Y here. So if this is the Y, this double X, where's the W and where's the X? So this needs to be your X, the first X, and then the W, you can place it either here or here. I don't think it matters. You can place it here, no problem about that. Okay, so now you got a W, X, Y, X, Z. And what are we doing now on the daily is still in the process of correcting this cycle, COVID-19 low, March 2020, right? Now, a lot of people are kind of, like, okay, first of all, notice here, when you have the first WXY, right? When you have the first WXY, you can see there is a decent rally coming out from the lows. This is the idea, guys. In correction, you don't really know ahead of time what sort of corrective structure is gonna get, right? I mean, it can continue to evolve, the corrective structure or whatever move that comes from the peak, right? But you notice the first three swing, the WXY, if you measure the 100% of the W and the X, you notice that it found support from the 100%, right? It hits this 100% where the W is equal in this one, and then you see the rally here, and this is not really a small rally, right? It's a decent rally, back to 4,100. I mean, it's not really very big, but it's still a rally nonetheless, right? So the idea of Elliott wave, a lot of people do not understand, and that's the reason they do not understand risk management, position sizing, and that's why retail people, as you know, mostly lose because they over lever with the position and they trade every single swing and so on. So if we actually only buy and sell at the right area with the right system and not trying to do every single swing, right? So that means, according to basically what we propose, is that these three swings should find at least some sort of reaction from here. Now it goes down again. Now of course, then if it goes down again, break below the previous low, we are extending it lower now because the structure changes. But before it actually extends lower, this could have been the end of your correction because it's a three swing, right? And initially we are calling it completed here because we don't have a reason to call it for the downside, right? If so far we've been in a bullish market and we got three swing and we did get the reaction. So bottom line is this: if we bought it at the red area with that rally over here, we could have already taken partial profit, move our stop loss, protect our position. Now a lot of people who lose money is those people that did not buy the red area, right? And they saw this rally and they say, oh, okay, it's finished, and then they're trying to buy the pullback. Now that's when they got, they can get into trouble with the sell-off because they are not buying at the what we call the extreme area. This pullback here is not buying, even though, for example, initially we might be calling for a three pullback like this and go up, but yeah, so people trying to buy this pullback when this is actually not really what we like, because the extreme area is actually from here, not here, not in the 1 hour time frame here, not this one, but is actually from here. This is the real extreme when it was measured from the actual peak of that bullish sequence. So now we break below here. Now of course then we should be extending lower now because the sequence is lower low, right? It's all about the sequence. So now where should be the target on the downside? Now 333, you can measure W equal to the Z as your potential target. So this is the potential target to the downside right now, which is 3464, where the Z leg is going to be equal to W, and the C leg should be in an ABC, where we should be ending A soon, rally in the B, and then do another leg down in the C to finish a WXYZ. So what other alternates can there be? Well, there are two other alternates, and and let me let me say why I believe this one is the more likely scenario, this triple. Okay, the first scenario is that instead of a WXYZ, this is actually the W is here and the X is here. So what's the difference? Well, if this is your WX instead of WXYZ, that means you're measuring the 100% like this. This is your entire connector, and this is only the subdivision of the W, and this is your X. Then your equal leg is going to be a lot lower, right? 3159. That's one possibility. Another possibility, but that also implies for the downside, same as the first conclusion. Even if it is a triple, you also need for the downside. Now second possibility is that this is a diagonal, like a 1 2 3 4 5, right? And so when we end the 5 ways down diagonal, we could start to do like a big rally 3 ways like this to correct this entire 5 ways down before going down. Now that's another possibility, another alternate, right? Now why is it that the triple probably is the more likely scenario, right? Is the most likely scenario? Because if you look at the Russell I think holds the key at the moment, right? If you look at the Russell, this one is clear that this is 1 2 3 4 5 swing. This breaks the channel here, so this one is your connector here. So this is your first swing, which is a three waves, 1 2 3 4, and then 5 6, and then you're doing 7 swings on the downside. So this is a classic WXY pattern here, very very well defined. The connector and the channel is very well defined, and we should be looking for 100% extension from the peak using this one as the connector, and this is the area of the 100%. So based on the Russell, the downside is not really calling for such a big move, like for example, because in the S&P we are not, this Russell is not, this is not the connector in the Russell, most likely, right? This is not like your WXY or the EBC, but rather from the Russell, this one looks to be a better connector from the peak, and you're not looking such a massive sell-off here. Now secondly, regarding the 5 ways down, now this one also has a very well defined 7 swing, so it looks unlikely from the Russell to suddenly has to correct this entire decline like this, um, from the peak before going down again, just like what we are proposing in the S&P, doing a diagonal. Okay, so diagonal can be kind of um, less likely, right? It is less likely due to the fact that we are um, diagonal like 1 2 3 4 5, less likely because the Russell doesn't call for that. And then this one being your WX also not as likely compared to the Russell, not calling for that to happen. So that's why WXYXZ looks to be the most sensible kind of expectation. Now regardless, even when we are calling a WXYXZ, it implies for the downside in the shorter cycle. So for now, is either we have a marginal low before we finish A and then do a B and not a leg down, or A can be finished already anytime, any moment, and then do the B, which is the bigger rally, before we go down. All right. So if you want to get further updates on the S&P or other indices, Forex, commodities, feel free to try our service. Check out the link to the trial in the description of the YouTube video. So I'll see you all again next time, and have a nice day, everyone.